All right, so welcome to another video. Today I want to share with you two different ways that you could trade a stock. Most people trade it one specific way, but I'm going to show you kind of another way to think about it as far as stock trading goes for movement to the upside or really to the downside. And we're going to talk a little bit about that in detail here. Now, if you want to get some more insight on this, definitely check out our classes on the Traders Fly website. There's a handful of great ones, and we have one that's really all about technical analysis, the swing trading full circle. You can also apply it for day trading and much more. And if you really want to get some insight and some charts, check out the Discord channel that we have in the link in the description. You can sign up there absolutely free. You can ask questions and much more. Okay, let's kick things off and get started. So what I want to do is put up a chart here for you. This is a Keltner channel chart. And what most people do, let me just go in and do this chart first. What most people do when they look at stock charts is they're looking for a specific breakout. So let's say a stock is trending in a certain way. And then what we're doing is we're kind of looking for it to break out, right? So here we have a stock trending, and we're looking for kind of like this pop or breakout. We're looking for it to kind of move out because most people in general are going to be buying. They're buying to invest because we buy it here, we sell it up here, and we're trying to kind of invest in the stock. Buy low, sell high, and this happens throughout a lot of traders. When you're just looking, hey, I'm coming into the lows. It looks like a good value. I'm going to go ahead and buy it. However, when it comes to the act of trading frequently, there's really two things that a stock can do. And you have to start to wrap your head around this when you're really starting to look at things. And when you're doing trades, especially when you're doing with option trades, and when you want to get a little more flexible, you have to start looking at it from a two-sided view. Look, what they typically do, the whole goal behind a stock is it's trying to come back to find a price. And when you're trying to find a price, the price is never really real. And what I mean by that is there's no exact price at any given time. You're either overpaying or you're getting it at a really good value because the true price is somewhere in the middle. So what I mean by this is that when you look to trade a stock, there's kind of two main things. Is you're either going to look for it to break away from the mean, because the mean is just a constant average that the price is trying to get to or find. So that stock is either going to try to break away from the mean, or it's going to try to come back into the mean, right? So we're looking to come back into it or get away from it. So you'll be able to see this here on this chart, for example. Here's Cummins diesel engine. So you can see the stock breaks away from the mean. So here's our mean, the average that we have. It's coiled up like a spring or slinky, and it tries to break out away from the mean. And then once we get too far extended, we try to come back into the mean. And look at that, back to the average. And then again, we try to get away from it. And then again, we pull back into it kind of. So this is what the stock is doing. So number one is the stock's trying to break away. Okay, so that's kind of the main thing that most people try to trade. But remember, it tries to come back to the mean. And if you trade it this way, it's a whole different way of trading and to think about the stock chart. So here what I've done is set up a little bit of a different variation. This is with Keltner channels. So it's basically like multipliers for average true range multipliers. And I've also highlighted kind of through a formula of like the white spots where you're kind of in a very tight range where you're probably going to get a breakout to the upside or to the downside. And what I did with this formula here is really we're analyzing it based on, I believe, half of the average true range. So here's the Keltner channels, price above or below the Keltner channels here. And when we're looking at it from this, we are using half of an average true range multiplier. So basically when it's really tight to the average price, you're going to see these bars turn white instead of green or red. So what you'll see is they'll either break, boom, to the upside or break away from the mean, so this is going to coil up the move. So let's take a look at this, and I'll just show you here. You're looking for a coil. And once we get in these swim lanes, so here we also have swim lanes. If it goes from a general day-to-day movement, one range, two range, or three ranges, when we get too far extended, we'll probably pull back in. So whether it's to the upside or the downside. So let's just kind of do a quick analysis here. or just to give you a couple examples. So what you can see is here, we're coiling, coiling, coiling. There's a few white bars, so you'll probably break away. And this is what happened here. Now, it could have broken away to the upside. It could have broken away to the downside. And in this case, it went to the downside. We got back to the average. And now, again, we're trying to break away. And there we broke away all the way up to here. And then chances are we'll try to pull back in eventually. Granted, this now trend is to the upside. So we stayed in this swim lane. So we're staying in this swim lane for a little while. Okay, and this is what makes this price move a little bit. Eventually, once we get further away, remember the average kind of keeps going with it. We'll try to get back into the average. And that's what happened here. Okay, so here, breaking away, but to the downside. And then when we continue going, here you'll see all those movements breaking away or trying to come back in. Breaking away, trying to come back in. So those are the two ways to kind of look at these charts and trends and pricings, is that you can either break out or away, which is the most common one, or break back into the average. And there's different strategies for different types of trades. You can definitely trade them in so many different ways, whether you're doing like butterfly strategies, iron condor strategies, whether you're just buying shares, shorting, or buying long stock. If we get too far extended, let's say on the downside, you could be a buyer, and then you're looking for it to come back into the average. So there's just so many different approaches to this, but I wanted to share that with you because a lot of people, they only think about the breakout strategy. They're just looking for it. Hey, here's our movement. Here's our movement. And then we're looking for it to kind of just break out and go higher. But understand that there's also the moving lower part as well when it comes to looking and understanding and evaluating all these charts. So anyway, I hope that helps, gives you a little bit of an insight and take. And you can do this pretty much on any moving average that you want, depending on the one that you're comfortable with. Normally, people use about the 20-21 day or so, and that is because there's 20 trading days in a month. So I'll say that's a good starting point if you're not sure which moving average to go with. But if you do like to, let's just say, trade off the weeklies and you don't trade as often, you could see, hey, from a longer term perspective, are we oversold or overbought? So in this case, look, we're way extended even here and here, and then you're trying to pull back into that average, right? So overextended, tries to come back, really tried to come back here. Again, got over here and there. Overextended, tries to come back. Overextended, tries to come back. Overextended, tries to come back, and then even sold further. So that's what we're really trying to do, is either break away or break towards. So here, if you look at CVX, breaking away from the moving average. So chances are this will probably come back. Doesn't mean it'll come back way down here. It just means we might pull back to the average, which might be to this point or something along those lines. So that's what I want to share with you. I hope you got some insight out of it. Just think about this as you're doing your own trading, breaking towards the moving average or away from the moving average. And you'll start looking at things a little bit differently as you start evaluating these charts in more and greater detail. Anyways, thanks for joining me. Don't forget to check out the classes, the one-on-one coaching sessions that I do as well with other people. And, you can also join the Discord channel there where you can ask questions and see some of the charts that I post from what's moving on kind of a weekly basis. Thanks again. I'll see you next time.